Welcome to our Asian session, everyone. Hopefully, everyone had a great Monday so far. Stock Nas, notice the range is getting smaller and smaller. It definitely is. Still in breakouts, closed in breakouts, but the inevitable is coming. Getting a bit of a slowdown. We're in the second week of the month, which technically can expand the range. But I'm just going to start off on a blank screen and just go over a quick debrief for just a second. Now, this strategy is based off of the timings, levels, and behavior of price. There are some important timings to consider. If you're trading gold or any Forex pair, this range from 8:20 to 9 o'clock is extremely vital, extremely important. 9:30 to 10 a.m. on any markets is also a very, very important range. And the reason why these ranges are important is based off of the psychology of trapping traders, just like the previous day. Because, example, we could get our closing breakout signal and they can trigger the previous day. If they're doing that, for one, we know who's triggered. And when they trap those traders, we now have a bias and we also know where their stops are. And that is a high case or high probability and possibility of them going for a stop hunt after they trap the volume back to the other side of the range. Now, what's important to understand for today, which is what I want to go over, is the opening range, which is Monday, but the opening range for our session, depending on the pair you're trading. Because, for example, oil opens at 9. So from 9 to 9:30 is technically the opening range for that session. 15 to 30-minute ranges and breakouts. This is how we will be entering the market. This is exactly how. Now, bear with me because for at least the first 30 minutes, I'm not going to be discussing anything current that's happening. So the A's in session, again, this is the beginning of the week. Can you get trades in Asia in the beginning of the week? Yes. But the highest probable trades in the Asian session are typically on the backside of the week. Keep that in mind. Asia can be a continuation session if New York has already placed the peak formation and they have a very strong move. Asia can easily continue that session. Or Asia's at the extremes. They're locking in a peak formation. And for the pairs that actually move in Asia, we can get a stop hunt reversal in that session. But these timings, very important. These levels, extremely important. Previous day high, previous day low, previous day closing price, extremely important. But when we get our opening range, or I'm just going to call it the orb, when we get this, let's just say this is our orb. we're doing the exact same thing that we're doing from any and all levels, high of day levels, low of day levels, weekly levels, closing price levels. The trades we're looking for are either going to trap and shifts, or they can break out, pull back, and continue from these ranges. And the reason why is time. So, based off of the time of day, we can decide, or not even decide, we can assess who's being triggered into the market, who's being trapped into the market. So I'm just gonna open up gold. Um, Now this, I did not state this in our session today, because this trade happens before our live session. But I did take this trade, and all I did was buy the breakouts of the opening range for gold. Again, gold opens at 8:20 a.m. From 8:20 to 9 is a liquidity injection. Now, don't get me wrong. Every markets for the New York session, all markets open at 9:30. But just to summarize, if anyone has the new course that Stacy has presented, and you're having troubles deciphering that course, just to put it in ABC terms, it is a dump and pump trading plan coming off of zeros, coming off of zeros, on Vector Day, or VD. I'm just going to put VD, Vector Day. He describes the 99-1 knot, which is the EMAs. Now I'm going to put my own spin on this. The spin I'm putting on it is the opening range of the actual session itself. And our entry, funny enough, is either going to be a trap and shift or a break and retest of that range. Now, it wouldn't be fun if I didn't have examples, right? Today is one. Screenshot this chart in your mind. Now, you don't have to screenshot these charts and save them. I'm going to post these in the Telegram. But look at this chart. I'm going to review a couple of trades that happened between today, past couple of days. Just assess what we're looking for and assess what you can actually do for any session, any Asia, London, New York. We have our peak formation high, peak formation low. We have our opening range. And look what happens from the opening range. They break out and they're gone. And the reason why I like this a lot for a entry method is because one, it's actually mechanical. And what do I mean by this? My entry will always be either, again, a breakout of the range or a trap and shift of that range. Now, traders may have gotten in slightly before the new hour started, or if you waited for a breakout of that range. The best thing about this is that our risk is 1 bar. The reason why it's 1 bar is because that range should be heavily, heavily respected. And a lot of the times it is. A lot of the times. And that is any pair. I'm going to go over a couple of examples. But my entry was the actual breakout of this range. But if you waited for the close of this candle, there's your entry. Stop loss 1 bar. and you can target three expansions of the opening range, major round numbers, levels, where the pump or dump began. Now, again, screenshot this in your mind really quickly. And I'm going to scroll back and show you three more examples of this. Here's one. Let's go to the next. It's not that far back, but just a second. Here it is. It was Friday. Same thing. Very, very similar situation here. Same exact thing. Just a second. I could have sworn I updated this. Just a second. Just gonna showcase something here. Where are you? Where are you? Oh, it's already set. Never mind. Oh, that's why I have to save it. Duh. All right. There's our opening range for gold. Gold opens at 820. Remember, 820 is a liquidity injection for gold and for forex. Injection, which means institutions, banks, traders, they're placing positions. Now, again, that could be a range for us to work with for a entry when we have a setup. So when I have a setup, and what's crazy is I took this trade for one, I took this trade, but I did not have these levels on my chart. But had I had these levels on my chart, I most likely would have had more confidence to scale in heavier. As heavy as I did scale in, I would have scaled in heavier because of how well, and I mean well respected, these ranges are. The opening range low acting as support, engulfment, entry, double zeros, entry, breakout of the range, one bar stop or a stop loss behind the range, entry, and you're done. Peak formation high, peak formation low. We're coming off double zeros. It's Friday, day three, vector day, wink, wink. So for anyone that is having trouble with the modules, there's really only one setup, and that is very expected of Stacy. Once again, the ACB module was specifically for free cash Thursday. This module is not just for gold, but it's catered off of gold because of its long bias. And on Vector Day, we're looking for the Vector setup, the dump coil pump right off major odd numbers, zeros. My spin off of it, my personal spin, you don't need all of these EMAs. You don't need EMAs at all, actually. All you need is our opening range. And remember, this is just confirmation of the actual setup. I'm not using this every single day. I'm using this when I have a setup, when I have a signal, and then when I get to that session, the opening range for that session will confirm the trade. So there's absolutely no guessing, none at all. Let's go to the next example. Funny enough, remember, mentally screenshot this in your mind for just a second. And here we go again. Funny enough, this is another trade that I did take. I took this trade. I did not have these levels on my chart, but again, had I had these levels on my chart, here was my entry, by the way. Had I had these levels on my chart, for one, I would have had a much tighter risk, much, much tighter risk. Two, I would have scaled in more aggressively because of how well respected these levels are. Here was the target. It was the prior day's close. A dump and pump on Vector Day. Oh wow, what a coincidence. Um, this is the setup. Let's see. Did someone comment? I was using this for range expansion. Very nice. You're ahead of the game. I've heard of orb back and forth. I mean, I see it all the time on YouTube and trade communities, discords. I didn't really pay too much attention to it. But I did my own homework. And what I found doing my homework was a real shocker because this is the high here of the session. High of day, high of session, it's right there. But remember, gold opens at 820. That's a liquidity injection. If 820 is the first mouse, look what happens. They hit their stops, they trigger longs, they trap them, and then we get our engulfment. Honestly, the bullpen would be my entry. Depends because I'm at the level and my max stop is going to be right there. What are you actually risking here? So I just want to talk about performance really quickly. You are not, you are absolutely not going to win every single trade. You will lose quite a few trades. You may lose quite a few trades in a row. But if you cannot let the numbers play out, if you cannot manage your risk the right way, and if you cannot execute your plan without letting those fearful, thoughtful doubts cloud your execution, because for one, the whole reason for me digging into this wormhole or rabbit hole was to figure out a mechanical way to just execute no matter what. The rule is simple. Sell resistance, sell the breakout, buy support, buy the breakout. And these ranges are made from our open timing for this session, for this pair. Oil opens at 9, gold opens at 820, index is open at 9:30. So guess what I'm doing with those pairs? That first 15 to 30 minutes will give me a range to work from. And when I have a setup, mind you, when I have a setup, look at this peak formation high, peak formation low. They do give a lower low, but they still pull back and they continue to trend. What template is that? This is one of our templates that we're looking for. It's 1, 2, 3. Breakout, pullback, continuation. This is not the vector setup, but I just wanted to show how heavily respected these levels are based off of the psychology of how and why they trap traders. Just to go back, go back, go back. Funny enough, let me just go over this for just a second. For one, this was Vector Day, day 3. 2, this was the double zeros again. And then right at 820, look what they're doing. Now, I wouldn't buy this because of the timing. I'm not going to trade right at the open. That's just one thing that I will not do. But I'm just pointing this out because this is not a coincidence at all. Let's go to the actual setup that I'm referring to. Now, remember, screenshot that in your mind for just a second because there is a very specific setup that I am looking for or that you can hunt for. Keyword hunt, which means you may be waiting and waiting and waiting and watching and stalking and doing absolutely nothing But when the setup appears, I'm quoting Steve Morrow. When the setup appears, you have to trade with no fear. It's Vector Day. How funny. We're coming off of the zeros. We are actually at a major or a tier two level, what he would call it, tier two. But that's our range from 820 to 9. That's our range. You buy the support or you buy the breakout or you buy the retest. Now, with this in mind, I am not ever going to think or guess where I'm getting in. I am trading from these levels. I will draw these levels across. I am trading from these levels because from these levels are where they confirm the trade setup for your session. A couple of weeks ago, Stacy was mentioning OR in the video. Let me find it. He did. He actually did. And he posted a few chart examples with that in mind. Now, mind you, I did not give it that much attention until this weekend where I was doing my homework because I noticed his gold trade came off of as a matter of fact, let me not talk about it. Let me go to it. You guys can do this on your device. You can go to Stacy's community tab and you can go to the gold trade that he took on Wednesday. And you'll come to find that he had two blue lines on his chart that may have seemed a little bit random because this is exactly how he had his chart. He had a blue line here and then a blue line here. Now I'm going to take everything off for just a second. This is what he had on his chart. Just these two lines. And then he highlighted this entry. Now, funny enough, those two blue lines, that was the opening range. I'm going to go to another chart that he posted that you can go do your homework on. It was the NASDAQ. It was a Thursday, if I'm not mistaken. It was a Thursday. Here's the chart. And I'm going to take everything off for just a second. He had this blue line on his chart, this blue line right here. And if you look at what he typed up, he had ORP 10 a.m. Let's go back. He had ORP 10 a.m. was a 5-minute chart. And look what's happening from the opening range of the session. Look what they're doing. They hit the stops, they trigger shorts, they trapped them, they engulf from this level. You know what's so funny about these levels? Once again, if you haven't heard me in the beginning, we're getting in. We're entering the markets. Repeat, we're getting in and we're entering the market from these levels. So when it comes to where do I get in, I don't want to hear that. I would rather you say, or you tell me what setup you're hunting. Is it a trend trade? Is it a reversal trade? Is it a trap and shift? Because this is what that's a trap and shift. They trap traders short. They trigger traders and trap them short. Who are they triggering and trapping? They're triggering and trapping the new 1 hour and 4 hour candles, breakouts, because that's the whole point of this range. So we can see if there is a breakout. And if there is a breakout, they're either going to accept or, excuse me, reject price. And funny enough, like I said before, These ranges are heavily respected. Even today, um, I did a little bit of doom scrolling today, did my fair share of doom scrolling, and there was a lot of traders on the NASDAQ today on the internet that went long, that went short. They got stopped at break even. They took losses. They did this, they did that. And all they had to do was wait for this off of the level. Timings, 10 a.m., levels, opening range, orb, behavior price, pin hammer, targeting the high of the day. Because funny enough, there was a lot of traders that were long biased. They had the direction right, but they had the timing wrong. They're buying this, and as you can see, they hit the stops. There were traders selling this back to quote unquote data lows. But regardless of what you're doing, as long as you're keeping it simple and repeating that same process, you're doing exactly what you're supposed to do. All I'm saying is that instead of trying to figure out and think where you're going to get in, I already know where I'm getting in. I already know the levels. High of day, low of day, closing price, opening range. Opening range. That is where I am getting in. That is where I'm placing my position. And that will be the only place where I will be taking positions for quite some time because, again, they heavily respect those levels based off of the psychology of when and why traders get trapped. This is the trap and shift. There would be the entry, a minimum target, okay, low of the range, maximum target, low of the day. So again, I'm showing this to demonstrate some simplicity. What is the OR for the equity? So I'm glad you asked that. Let's go to some of those charts. I'm just going to show you how you should set up your chart. Let's go to Apple for just a second. I'm going to pull up my templates. Now, what you're going to see here is a pre-market range from 8 to 9. And then you're going to see a opening range from 9:30 to 10. Now, again, I am using TC 888's indicator for this. You can also make your own indicator using Claude. Very reliable, useful source. But let me just start off going back to the Apple trade that I actually took a few weeks back, just so you can get some perspective of how heavily respected these levels are. I'm going to go over the Tuesday trade first. Monday is our opening range. Now, this was Friday's high, and you see why I have that pink box there, because that is the previous week's high, and look who they're trapping. They're trapping longs. But funny enough, okay, this is the first hour's high and low. And look who they're triggering. They trigger both sides. They trap longs. They trap longs. They triggered both sides though. But if you waited for this breakout, there's your entry. There's your max stop. You're potentially targeting one, two, three full expansions of that range. Um, 267. puts, 265 puts, regardless of your strike price, this is easily, and I am not exaggerating this at all. This is easily a 500 plus percent day. This potentially was even a 10xer right here. 10x. The trade that I actually took for 800%. There's our pre-market range. They they're trapping short, so I'm doing everything as before, same as before. Who's in the money? Who's trapped? Where's the opening range? Where's the initial balance? If it's day three, do I have a 3 day setup? Do I have a peak formation high? Peak formation low? Guess what I'm automatically thinking? Peak formation high, peak formation low, trapped volume. I'm automatically thinking dump and pump. Now, what's crazy? This is what's crazy is that I actually took my position right at the breakout of the New York opening range. And what's crazy is I still got 800% from there. From here, I got 800%. But look at these levels. Entry, they're breaking out, get in. Breakout, pull back, bear hammer, get in. This could be a starter. This could be an add-on. Point of the matter, it's the same exact thing for the equities. You shouldn't be doing too much thinking. When you have a setup and the timings, the levels, the behavior price, everything is lining up, guess what? Guess what? We are taking our position from and at these levels. From and at these levels. Breakout, pull back, double bottom, hammers, pins, engulfments. Just get in. With the equities, what I've noticed is that it doesn't really matter that much which candle you're trading or entering your position on. What matters the most is your strike. Now, again, I've mentioned this before, but I'll mention it again. If you're trading equities, my strike price will always be out of the money. I'm never going in the money. For one, it costs more. But two, why would you go in the money when, for one, we're hunting parabolic opportunities and your strike is going to be out of the money because we're down here when we're placing our position. And since we're targeting the parabolic opportunity, our strike can be one, two, three whole grid levels away, which makes it super easy to pick a strike. If I'm getting in down here at zeros, guess what? My strike is going to be up here. I don't have to guess. There's no I don't need a range expansion tool when I have the grid on my chart. And I can just go from 0 to 50 or 0 to 75 or 75 to 0 or 0 to 0. That's what makes it really easy. I was referring to NAS US 30. Well, it's all the same, bro. NAS US 30. Guess what those are? Guess what the NASDAQ is? Did you know that Apple is a part of the NASDAQ? Wink. So it's the same thing. US 30, Walmart is part of the Dow Jones. So if I go to Walmart, it's the same thing. You're going to see the same templates, the same setups, the same behaviors, the same entries. Look at Walmart today. Look what happens at our 9:30 orb. Look what happened. 9:30 to 10. Do you see this? I want you to understand that all of that stuff that you're thinking about and doubting and questioning, it just doesn't matter. It just doesn't. The only thing that matters is pump and dump, because that's what happened here. They pumped it up, peak formation low, peak formation high, trapped volume above the previous day's high, trapped volume. Guess what I am thinking? Pump and dump. And then instead of drawing all of these lines on your chart based off of the time of day, that is where we will be placing our position. The timings, the levels, and the behavior price at those levels. Beautiful trade here on Walmart. For those that got stuck on the US 30 like myself today, I took a loss on the Dow Jones. I was short biased. Now remember, Walmart is actually a part of the Dow Jones. Should have just traded Walmart today. This was a clear setup. This is what I'm looking for. Remember our models, our simple model, peak formation low, peak formation high, trap, peak formation low, peak formation high, trap, and shift. Does this look familiar to anyone? I've spoke about this a plethora of times. But again, Forex is the same exact thing. Let's go to oil today, actually. Oil today was pretty interesting because look where the trade came from. Oil opens at 9, remember? 9 is the true open for oil, 9 a.m. So that first 30 minutes from 9 to 9:30, that is, no, mind you, 9:30 is still the New York cash open, but the institutional open for oil is 9 o'clock. So from 9 to 9:30, that is going to be my range. Look how heavily respected that range is. Entry. Okay, you didn't like that? Entry. Back to where the stops are being placed. You're only risking like 30, 40 pips here, and you're getting 150, 200 pips on the way up. So when it comes to risk to reward with this, um, you should not be scared to take a loss. Nikkei, just a second. I know it's the Asian session. We're heading into the third hour. So opening range breakouts. The opening range for this session. If you're trading the Asian session, I highly suggest you pay very close attention to the first hour's high and low. But I'm just gonna go to GU because remember, GU or currencies open at 820. So from 820 to 9, since that actually is a injection of liquidity, if they somehow break out of that range, that's a 1 bar stop. Let me just give you guys some perspective, guys and gals. Entry, you're risking 5 pips to make 25 minimum. Let's just say minimum is actually 30. You get 30 pips off of 5 pips of risk. Do you know what you can do with a small account with about 10 to 20 of these? emphasis. I'm just gonna put some emphasis here. Let's just say you have a $1,000 account. And for 5 pips, let's just say you have two lots. You're trading two lots. Now, for one lot, 5 pips is $50. For two lots, 5 pips is $100. So if you're risking $100 here, and what is this? 5R? You do the math. Now you go from 1,000 to 1,500. Now do this about 10 to 20 times, and then you'll see what's actually possible in a very short amount of time, keeping it very, very simple, using these levels. When we have a setup, when there is already volume trapped in the wrong direction. Does this template look familiar? Peak formation low, peak formation high. They're breaking out, pulling back, and continuing to trend. One, two, three. There are some traders that don't necessarily believe that these three templates actually work. I have the data. I have over 17,000 screenshots, and the majority of them all were one of these patterns to some degree. Here's our basic pump and dump. They trap volume above the higher low. Here's the trap and shift template, a very favorite template. They trap traders at the extreme. Here's also another favorite template. It's not talked about that much like it should, but it's just a break and retest. That's all it is. I'm pretty sure we've all heard this at the very beginning of our trading career, break and retest. But again, any session. So for example, let's go to an Asian pair. Let's go to an Asian trade for just a second. I'm going to go to New Zealand dollar. And I'm going to, wow, that was today. Wow. Look, breakout, back to the money, easy. Now, this is moving. No signal. Or was that a signal? Excuse me, that was an inside day. Inside day signal. They have not triggered a level yet. But what you can do is mark off the first hours high and low, and that's it. We're trading from that range for Asia. And if it doesn't come off that range, I don't want it. If I didn't have a signal the previous day, I don't want it. Now again, I'm going live in the Asian session, and there will be a few of these trades that I will actually take based off of what I'm specifically looking for. Now, I'm going to say this with emphasis. If you cannot draw your setup, you need to draw it. You need to draw it. And then you need to learn to wait for your setup. And then there's also the learning curve of executing your setup. Let's just draw this up really quickly. There's the first hour's low. Here's the first hour's high. Now, again, I do want to trade from or off of this range. They had already trapped volume. We've already came up 3 levels of rise. It's the second hour, which I'm targeting that second or third hour from the extreme or the closing price. And as you can see here, what do we have? We have our infamous trap and shift module. Now, yesterday was a, whoa, 1 second. Would I call that a first red day? And no, I wouldn't call that a first red day, at least not yet. We do have a breakout here, and they are now underwater. So technically, because again, technically, first red day signal is when they trap longs. It's a bull trap. First green day is a bear trap. But again, what I am specifically looking for in the Asian session is a continuation from the New York session or a reversal from the extremes. So know what you're looking for, know what you're trading, know what it is supposed to look like over 3 sessions. London, New York, Asia. Does this look familiar? Please don't let me have to draw this up. P formation low, P formation high, strap, and bang, 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 bang. I've talked about where to get in. I've talked about the stop loss. I've talked about the target. This is easy, easy money. Very easy. Now, again, opening range. Opening range. That is very vital. Very, very vital. Opening range. Monday, initial balance. Tuesday. Looks like gold also gave a pretty decent setup here. Let me draw the first hour's range because that is going to be our process for Asia from here on out. Draw the first hour's range. There's the first hour's low. Here's the first hour's high. They break out right at our level. Stop loss. Let's just say we're targeting Friday's closing price. That's 5R. Uh Back to the grid level, 25 level, that's 3 to 4R. Who's complaining? I wish I had hit it harder just now. That's fine. We have to build one step at a time. Don't go too fast. You don't want to go too fast, but you also don't want to be too slow. There's a happy medium right in the middle where you're calm, you're collected, you know what you're looking for, you know what you will not tolerate. You know when to execute and you know when to sit on your hands. Now, again, we have very, very simple models, and now it's even simpler because now we're getting in at a very, very specific level at specific times on specific days on any market, crypto, gold, equities, forex, you name it. Account tripled this week for the first time ever. Oh, wow. And you wish you hit it harder? You need to be done. You're done. You're done. I don't want to see you until the backside of the week. Relax. You just tripled your account. Excellent job. Congrats. Take it easy. Go to the demo for the rest of the week or until the backside of the week. Protect your capital. Excellent trade. But again, I'm gonna be reviewing this for the next couple of days. We're all gonna be on the same page by the end of this. A lot of you already have done the homework. A lot of you already know what you're looking for. You already know the pairs you're trading, the times you're trading. You know what your setups look like. You know what days they set up on. Now I'm gonna add the cherry on top. You know exactly, and I mean exactly to the T where you're getting in exactly where you're getting in. Now, again, I did take gold, one winning trade on gold, one losing trade on the US 30. I didn't mention it just to save some breath and to focus on the US session in the whole. But again, timings, levels, behavior, price, and that is all you need. I can go back on any pair and show you how well, and I mean well respected, these levels are. It's almost unbelievable. Here's oil's opening range based off of the timing that it opens, 9 o'clock. I'm just marking off that simple 30-minute range. And now with this 30-minute range, that's a higher high. You can't argue that. That's a higher high on the inside. You cannot argue that. They go hit the stops. Oh, but why did they not hit the low of the session? I don't know why they didn't, but that's not where I would be getting in anyway. I'm getting in here. I'm getting in here. I'm targeting there. That's 500 pips, by the way. From 25 to 75, that is 500 pips. If this was the only trade you took the entire week, you would be amazed. And I mean truly amazed. Let me just show you something here. We're taking it up a notch. We have a very tight risk. Look, that's 50 pips. You have 50 pips of risk, but 500 pips of target. Do you understand what this can do for you on whatever trading account you're trading, prop firms, live accounts, even if you're just practicing on a demo account, you will be your confidence will definitely skyrocket. Don't get too ahead of yourself because that euphoria can also be a hindrance for you in later trades. You want to come to the chart calm and collected. So after a big win, if you're very, very, very euphoric, that is a indication. That is actually the biggest sign that you don't need to be trading anymore until you hit baseline again. Baseline. So let it die down, even if it takes the whole week. Do not come back to the charts. Rinse and repeat with our setups, our behaviors, and our state of being. Look at these trades. Look where they're coming from. How much are you risking again? 50 pips to make how much? 300, 400 pips? Again, what exactly are you looking for? Does this template look familiar? Peak formation low in Asia, peak formation high in London, which is a higher high. They're pulling back and trapping everyone below the closing price, below the opening range. And bang, one, two, three. Dump and pump templates. It was a nail and bail, but a high probability one that's scalable. So I don't want to make this too long because I do want you all to review this. You can get this indicator, or you can get TC's indicator um, on his channel. I'm just going to show my settings for that indicator just for a second. Here are my settings. I have, these are my only settings, by the way. Everything else is turned off. First hour extensions, New York session only. You can adjust the line style as you like. And then I have the New York open box from 9:30 to 10 o'clock. And these are the only settings. that I have for that. Now they have, or he has the open box for all sessions. So you can use that. Technically, the open box is in that second hour for Asia, technically, but it's not going to make that much of a difference if you're using the first hour's high and low compared to the open box. I mean, it's the same thing. The process is what makes it the same thing. You already know where you're getting in from based off of the time. You already know where your stop loss is going to be placed. Then from there, it's just execution. Stacy said if price is coiling above or below closing price is going to make a powerful move. Correct. And as you can see here, bang. But templates and setups, templates and setups. I'm getting in from these levels. Now, what you're seeing here is the first hour's range and the New York open box. Now, when you don't have a setup, you just don't have one. That open box will either confirm the setup or invalidate the setup. Now, oil has been pretty messy here lately for New York. But let's look at these two examples for just a second. There's the first hour's high and low. If I extend these out, if I extend the open box out, as you can see here, this is the 9:30 to 10 a.m. open box range. We do get a entry from the closing price. If traders were on the screen for the hour, they also break back inside of this open box range, which guess what that means? Guess what that means? That means that this liquidity injection range just trapped shorts. With that being said, entries, entries. It didn't matter. All you had to do was get in, place a stop loss, and look for targets, range expansion, etc., etc. Here's the next one. Now, this is probably something that I actually would still not take, but as you can see here, how heavily, and I mean again, heavily respected that range is. Heavily respected. You would have had to have waited and understood that this is a market that broke out and pulled back. But if you understood that, okay, entries, nail and bail, it may not be a super duper A plus setup, but again, it didn't really matter because again, we know where to get in from. We know exactly where. High and low of the day, high and low of the session, high and low of the week. During the actual session itself, who are they trapping? Is it longs? Is it shorts? Now, again, this is the 9:30 to 10 o'clock range. They break out, pull back, bull bar, breakout bar. I'm in. There's my entry. I'm only risking one bar. So just to put some emphasis on this, I'm only risking one bar. Based off the spread, you may have it here for 40 pips. And it's gone. She's gone. And you're done for the week, or at least done for the front side of the week. You may be targeting one more on the backside, but you're done. So if there are no questions, I will be within the next couple of days posting charts in the charts section. They are for you to screenshot, save, and study. Stop watching all of these videos because whatever you think you're looking for, you're not going to find it because what you're looking for is not on the chart. It's in your mind. It's discipline. It's a plan, a actionable plan, a real plan. Timings, levels, behavior, price. Build your playbook. Understand that you should be trading pairs and setups that have repeatedly happened over and over and over again. You should know what they look like, what times they set up, what days they set up, and doing absolutely nothing else in between. So, with that being said, yes, sir. Dumb question. How did you get that symbol heading showing up on your chart to the right? Not a dumb question, but if you look up info, symbol info in the indicators, search up info. There it is right there. That's the indicator. Symbol info in indicators. Pretty cool one. I am actually going to add that to my own indicator very soon. Because I actually don't like using other people's indicators. That's just me. It's just a preference thing. Look at this setup here. Look where it came from. When we are drawing on where are we drawing on what candles? Okay, you're gonna have to reword that. Reword that. Grammar. Grammar alert. Now, I do understand your question. It's not about the candles, it's the clock. So the 9:30 low, 10 a.m. high. Mark it off. 9:30 low, 10 a.m. high. That's your range. Or you can just again get the indicator from TC 888. It's free and adjust it accordingly with the settings that I showed. You will have the first hour high and low, then you'll have the 9:30 to 10 a.m. window. You don't use trading view. Okay. So it's timed. Now remember, I actually did if you're gonna have to review this video, go to the very beginning. I marked off three very distinct timings, three of them. 8:20 to 9 o'clock, 9 o'clock to 9:30 for oil, 9:30 to 10 a.m. for all equities, all of them. But the most important one is 9:30 to 10. That's the most important one. So if you don't use TradingView, but whatever you're using, again, I highly suggest that you go get a indicator built. There are AIs now that can build whatever indicator you want. It's a $20 subscription, I believe, but you can get that thing built. You don't have to do all of that hard work. 8:20 to 9 o'clock, 9:30 to 10. And then for oil, 9 to 9:30. But honestly, and this is a very, very honest thing here. For all markets, you can just use 9:30 to 10. This particular trade actually came off of the first hour's range. But if you're using 9:30 to 10, there's a pin hammer here. What are you risking? A few pips? But again, the better entry would just be from the closing price here. If I put on the other range here, now I'm doing some experimenting, doing quite the experimenting here. But as you can see, oil's opening range, beautiful. You can't mess it up. You can't. 9 to 9:30. That is oil's opening range. You can't mess it up. It just works. And it works a little bit too good. It's almost too good to be true. That was on a Tuesday, range expansion day. Tuesday's tomorrow, by the way. You remember the US 30 trade that I took on Friday? Well, I'm gonna show that trade. I'm gonna show where it came from. Where it came from. So just a second. I will pull up the Dow Jones. US Cat had other plans today, but I will pull up the Dow Jones. Oh, it wasn't Friday. It was Thursday. Sorry about that. Thursday. Let's look at the open box. Well, we have our first hour range. We have that, which we had an engulfment, a breakout pullback engulfment right off of that, right off the previous week high level, right after the opening rent, first hour high low, blah blah blah. I actually hesitated on that because I was already in the Nasdaq, but I did take low hanging fruit, and this was my entry. Now, again, I had no idea about this range before, but had I had an idea about it, yeah, my thesis would have been a little bit stronger, and I would have had a little bit more confidence on that trade. We can go on and on and on and on, and it will be the same things over and over. So, what setup are you looking for? What setup are you hunting? And how simple can you make the identification process and execution process? Am I posting this video tonight? Yep. It's on the cloud. So it shouldn't take long, maybe 15 minutes after the session's over. It will be ready for me to send the link. But again, this is a good one. So rewatch this one. There are two Trend Predator Pros. It's the hold on. It should be Trend Predator OB and not either one of those, actually. Trend Predator OB. Whoops. Where is the oh right here. Let's see. Or let me just type up his name. See what pops up. Oh, the name doesn't pop up for some reason. That's weird. Uh, it is this one here. Trend Predator OB. If you go to, it's not this one. It's not that one. This one. I'm pretty sure they all have the same or similar settings within the actual indicator itself. I'm assuming that this one is for ES, or I don't know. I have no idea. Yeah. Really, really, really helpful. Extremely helpful. So with that being said, I will see you all New York Open. May the markets be with you all and peace.